Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that he's tracking closely. Sachin?
Multimodal logistics provider Transport Corporation of India delivered a steady set of earnings in the final quarter of FY25. Revenues in Q4 FY25 grew almost 9% year-on-year, whereas the net profits grew to almost 13% year-on-year. On a segmental basis, the revenue streams were quite divergent. The freight business, on one hand, exhibited some weakness, primarily due to slowdown in product execution across capital goods, infrastructure, and the engineering sectors. The margins of the segment also are under pressure, primarily due to competitive pricing environment. On the other hand, the supply chain business continues to remain on a very strong footing and grew almost 15% year-on-year. The management expects this vertical to clock a steady growth rate in FY26 as well, and expects it to emerge as the largest revenue vertical over the next 12 to 18 months. The CVS business also had a steady quarter thanks to benign fuel prices as well as steady capacity utilization trends. However, it expects the FY26 to be a steady revenue year for CVS business due to dry docking of 2 ships. On the other hand, in terms of the capex, the company is planning capex in the CVS business, and it expects the delivery of 2 new ships in the middle of 2026, which should pave some recovery in terms of profitability going into FY27. Overall, company remains on a very solid footing, and it expects a revenue growth of almost 10% on a YOY basis for FY26. Trading at around 19 times FY26 estimated earnings, which we believe the company's valuations are very reasonable for accumulation from a long-term standpoint.
All right.